Pinterest continues its hot start to the year. Strong Q4 results sending the stock surging this morning. You can see up better than 18%. Let's get to Julia Borston along with Bill Reddy. Hey, Julia.
Hey, Carl, thanks so much. I'm joined now by Pinterest CEO Bill Reddy. Thanks for taking the time on the heels of this better than expected report. And what's so striking to me is it wasn't just that the Q4 results were better than expected. You guided to much stronger than expected results in the first quarter and indicated you expect these trends to continue. What are the factors that you see driving your growth this year?
Well, 2024 was a really transformative year for our business, really along two dimensions. The first, us leveraging AI to make really great recommendations to our users and driving engagement with our users and shoppability for our users. But then also the advancement of our ad platform as a performance ads platform that's delivering great return for advertisers. And so both those things are working really well. You saw us in Q4 hit all-time highs on users. Our engagement is at an all-time high in terms of weekly active to monthly active, as well as our largest ever revenue quarter. We had our biggest ever Cyber 5 shopping. And so those things are really gaining momentum, but that's really been the business transformation we've been driving for the last 2.5 years, and you're just seeing the momentum of that continue to build.
So you're talking a lot about revenue, but also 2024 was your first full year of profitability since 2021. My question is, how will you be able to sustain that return to profitability going forward?
Yeah, so for the last 2.5 years, we have talked about our focus on profitable growth. And I think one of the things you've seen from us is that while AI has become a core competency for us, we have been really focused on leveraging AI for high return use cases and delivering that profitable growth. So we've been delivering consistent margin expansion. And I think this is one of the things that may not be fully appreciated is that not only have we driven consistent margin expansion, we delivered over $1 billion of adjusted EBITDA, but we also had 90% plus free cash flow conversion on that. So we were really generating a lot of cash and really proving a highly efficient business.
Yeah, it seems like analysts are focused on that cash flow now. Now, over the years, I've reported on how you've been making more and more of these partnerships, notably with Amazon. How important have partnerships like the Amazon one been to driving all of that growth? And do you think you're going to be making more partnerships? What role will they play going forward?
Well, when you look at what we've done around shoppability, we've had broad-based partnerships with Amazon on multiple fronts, first party, third party, and we've started to work with many more retailers. And what you're really seeing, and we've called this out consistently, that our direct response business, which is us sending traffic directly to retailers, that has been our fastest growing part of the business. At our investor day, more than 2/3 of our business. It's been our fastest growing since then, so it's gotten larger. And so if you're a user on the platform, one of the things you're seeing is that a few years ago, Pinterest was a place that you could do a lot of window shopping, but all the stores were closed. As we've opened the stores and made it so you can easily connect to those retailers, that's driving great engagement for users, but great monetization with advertisers. And if you're a user of the platform, you certainly would have found a lot of things for the holiday season on the platform. A lot of those you might have got fulfilled through Amazon, but you're seeing a broad swath of retailers engage with us, which is really fantastic for our business.
I mean, you're talking about monetization. One thing that was so striking is there's a huge gap between the way you're monetizing your users in the U.S. and Canada and those that are overseas. And right now, 20% of your users are in the U.S. and Canada, but 80% of your revenue comes from those users. As you look to monetize the 80% of your users that are outside North America, what is your strategy? And will those users ever be as profitable as the ones here in the U.S.?
Yeah, this is one of the things, as I came into the business 2.5 years ago, I felt that the platform was quite under-monetized relative to the commercial intent that users had on the platform. And as you rightly called out, we have more than 80% of our users outside of our UCAN region, but approximately 20% of our monetization. So we've been focused first on solving monetization in our home market, and we still have a lot more of that to do. But that's a big opportunity for us in international, is that many of those markets were completely unmonetized for us. We're making zero from those users. And so, yes, there's some of those markets that may not become as valuable per user as the U.S., but they can be much more valuable for us than what they are today. So we are executing well on multiple dimensions, and shoppability, the user experience, the performance ad platform, are core to that. But international is still very much in front of us in terms of opportunity. There's a lot of it there.
But that also means growing exposure to foreign exchange headwinds. You said you expect 2 percentage points of impact, but how much uncertainty is there around FX?
Well, for us, we guided to 15 to 17% for Q1 on an FX neutral basis, and we said that includes about 2 percentage points of FX headwind if you look at it on a spot basis. So it's something that we're paying attention to, but we have much more revenue in our home market. But those international markets, while there may be some FX headwind, those are fast-growing markets for us.
I just have to ask a quick question about tariffs. Do you expect tariffs to impact some of your advertisers? Will we see companies like Shein and Temu pull back from advertising on your platform? And what overall impact do you think these tariffs and the threat of tariffs could have? Well,
I can't predict what happens with those any better than anybody else can. But what I can say is that we've really made Pinterest a fantastic shopping destination. And I think one of the things that the pandemic taught us was that even if there are major disruptions in supply chains and things like that, people are still going to shop. They'll find substitute products, they'll find other places, and Pinterest is exactly the kind of place you go to do that. So I can't predict what will happen with tariffs in one place or another, but what I can say is that Pinterest is going to be a fantastic shopping destination, and users will find their way to go get products from whatever makes sense for them, and we're going to be a great place for them to do that.
Well, certainly a lot of people watching to see what the tariff impact will be if there is one. Bill Ready, CEO of Pinterest, thanks so much for joining us.
Thanks for having me.